Yo, what's up, everybody? This is Mike over at Foos Alerts. Today, I want to go over a trade on the short side that I had hit last week. The ticker we're going to be talking about is OPXA. So before I talk about details in this particular stock, I'd like to go over generally what we look for in any type of short setup. So ideally, want to see a stock that is small cap, low float, that has made a 50 to 100% move within a short time frame, that being whether it's a day, 2 or 3 days. It all depends on the name. However, what you want to look for at that point, once you see that criteria of a 50 to 100% move, you need to determine where the support and resistance levels are going to be on the daily chart. So on the right-hand side of this chart, you have the daily chart in OPXA. And all that I really like to do, everybody, is basically take these horizontal trend lines and draw them down to zones that are clearly zones where the stock has peaked out. So 150 was obviously a major resistance point, and then going into a shorter time frame, looking at about a $1.20 zone. I typically like to look for at or around where the thicker part of the candle is, not so much of the wicks. But you can see $1.50 and $1.20 were pretty major resistance zones on OPXA. You can also, I'd like to look at the weekly chart to see where there are any major resistance points, such as moving averages. You also have the 50-day moving average right here at about $1.15. So this, going back to the day it ripped on Wednesday, stock bottomed out at about 70 cents, we'll call it, and within 1, 2, 3, 4 days, it was as high as $1.15. That's basically a 50% plus move within that short-term time frame that we're looking for. So on a short setup, guys, the key is to short into basically resistance. You know, you want to be shorting on pops, not so much on drops. And just like you want to long a stock, you want to long it on a possible pullback rather than buying it at high of day. So OPXA was hoping to see this basically spike into the 120 area and get short once the confirmation move was to the downside. So I had started my short position, pieced in on the move up, and really started to hammer this at about 110, 109, where we clearly had the reversal on the 3-minute ended peaking out right here. So I was risking 120 and was looking to get roughly 20 to 30,000 shares as close to that resistance as possible, which would give me the greatest risk reward. This was basically a perfect FU breakdown. I shorted, my average was about 20,000 shares at about 107, 108. So I definitely could have got a better average, but sometimes you can only give what take what the market gives you. Once we had this nice breakdown below the 13 EMA, as well as the VWAP, I had basically added to my short right here on this breakdown. And you can see the rest of the day, this ended up holding below the VWAP and basically seeing further downside for the next 2 or 3 days. So usually you see these in these shorts, guys, where even though you can take your quick gains, I had actually made about 1,700 bucks on this, 20,000 at 108, 107, covered at 98. But for the next day or two, this ended up showing further weakness. So you could have held your shorts and still made another 20 cents on this drop. But you can see now, looking at the daily chart, I usually do not like to hold on to stocks, guys, when the volume drops to, 200,000, 300,000, 200,000. Leads for very poor trade quality setups, and you really don't have too much liquidity to get in or out of the stock. But that being said, OPXA was a perfect example of how you can gauge resistance levels on the daily chart and use a multi-time frame analysis to figure out where the stock is going to move on the intraday time frame.